In this video, we'll talk about the daily and weekly price action of Tesla. I know everyone loves to hate it. We'll talk about the long and short dated options interest, and we'll touch on some Tesla news. There's always stuff going on for Tesla, and we'll check that out. Long story short, still a core position in my portfolio and expecting big things 2026, 2027. But I wouldn't get too excited about 2025 price action if I was you. But let's get into it. Okay, jumping straight into the chart. I was hoping this wouldn't happen, so I'm pretty annoyed that it has. Tesla has had its trend breakout. Super annoying. All the momentum traders are probably going to want to pop off into this one, though. I'm still really hoping for a pullback, at least back test this line down towards the 319. Given the wick action we had here, that is a possibility. But I did add on the off chance that we don't get a pullback here. Just to keep adding at a cheaper price, because I think once this zone is gone, that is it for Tesla. We won't be coming back here. But happy to be wrong, because I would like to buy as many shares of this as possible into year end. I think in the previous video we talked about it looks like it wanted to break lower in this wedge, have another back test of this kind of 270. That hasn't happened. Annoyed, super annoyed, but this is why we add at all sorts of levels. We don't just wait for the specific level to add everything in. So I should have, sorry, my dogs are barking. I should have taken more off the table here, but that's not necessarily a bad thing, because I still added a heck of a lot of shares all the way around here. So when I put one ad, that's not saying one share, that's just one lot. So for me, a lot size depends on the size of which portfolio I'm using. So this is my eToro portfolio, so 5 lots is actually quite a considerable amount of size. So I didn't actually have the measured move for this bit. Let me do it now so it's clear. Again, if we do have a back test, this blue line would move over to where the back test was as the kind of measured move. So I don't think we're going to have too much problem pushing up to kind of 400, 428 up to that fib level. That's going to be good resistance there. 400 is going to be resistance, and this golden Fibonacci, that's going to be, I think, the toughest one to break. But we'll have to wait and see. The narrative on Tesla is slowly shifting. But yeah, still mega bullish 2026, 2027. This is a long-term position for me. This isn't a swing. This is something I want to build into year end. I don't think 2025 is going to be particularly great on the auto business. And we'll certainly see that, and a lot of people commenting on that. But energy, they just closed a banging energy deal that will add a good chunk to the bottom line. And also, what else did I want to talk about? Obviously, robo-taxis are scaling up massively. We have some news on that as well. So overall, super excited. I don't think Wall Street's pricing in any of the robo-taxi really. So that could be very interesting when they start to understand that Tesla can bang out these cheap cars and make profit year after year for next to nothing. Very exciting on that one. So indicators wise, kind of looking fairly neutral on RSI. MACDX Plus looks pretty good. We did have that oversold indicator there, which, how many days ago? That happened after. So I was looking, last time I looked at this, I was about on this red bar. So if we'd have had the oversold, then I wouldn't have been as confident as having a pop. But that is how it happens. We can't predict what is going to happen. We can have a probability based guess and structure our positioning based on that. But anyone that says Tesla is 100% going to this price or 100% going to zero is absolutely pulling numbers out of the foof. It is just giving yourself a very educated guess on where price is likely to go, not where it's going to go. You have to manage your risk based on those levels, and also fundamentals overall. Everything fundamentally, we knew Tesla was weak, but it's going to be in a place of strength in a couple of years. So we have to build our position ready for that. And we also know Tesla typically front runs and has a high PE. So you have to base that into your trading of this asset. That's quite different from a lot of stuff I invest in, I assure you. Quick look at the weekly. Yeah, we had the kind of failed, messy cup and handle, which I'm not really trading that pattern anymore, so I probably need to take some of these lines off. So in the short term, I don't think Tesla has much of a problem getting to at least 400 into year end, but hopefully we can get it up to this Fibonacci level at 432, because that would actually put a larger cup and handle into play, which would be up here. Just draw this. I really need to tidy this chart up. I keep saying I'm going to do it and then forgetting. So if we can push up to here into year end and then pop over, that would be a very nice cup and handle for setting up for the next few years, and that would be very nice. But I'm not necessarily trading that right now because I think this is going to stay volatile for the rest of the year. RSI on the weekly, neutral, kind of neutral, more neutral. So nothing too exciting. I'm going to look at the options market though, because that was quite undecided last time as well. Let's have a look. Options market. Let's have a look what we're looking at. We're starting to get up to the top of the range here. Typically, Tesla does obey these patterns. Let's look historically. We very rarely get out of them, and market makers do push us back into it. So I'd expect that to hold as a support, a resistance. So I'm not expecting to break that this week. Something to bear in mind. A lot more bearish sentiment than bullish on this. Well, not a lot, but it's kind of in line. Pushing out a month. Not really exciting. I did look into why there was such high volume at some of these low strikes, and it's definitely hedging. Those strikes were really, really cheap. So it was cheap risk avoidance. So they were compensating for any shortfall in the stock at an absolutely bargain price. So it made a lot of sense. So I would ignore that. That is not actually people were expecting. It's just a bit of hedging. If we have a really bad macro event, shorting Tesla for a cheap entry is, it's really clever. I'm actually annoyed I missed it, but there we are. I want to push out to 2026. So that's where I think all the exciting stuff's going to happen. We start to see a lot more bearish volume into year end, which makes sense. Like I've been saying, 2025 into year end is going to be very choppy, very volatile. Tesla's make or break. Can they bring a lot of these products to market and profitably? But 2026, 2027, those are where we start to see the massive ramp ups and the scaling out their infrastructure. So we have been seeing this already, but if we push out to January 2027, we see the market switch is pretty dang bullish on it. So the big boys who use the options market, they are betting pretty heavily that post 2025 Tesla is going to do quite well. Let me just pick somewhere kind of like the middle. Let's go June. So middle of the year. Again, people are definitely starting to look at 2026 as something where Tesla's going to be looking a bit better, certainly more towards the end of the year by the looks of things. Is that going to load or is it going to crash? So something to bear in mind, it's time for Tesla. Tesla is not going to be booming in a month's time. I would not expect that. Price can get ahead of itself, certainly, but the actual underlying fundamentals of the company, we're not going to be seeing anything hitting the bottom line in any exciting numbers for quite a while. So bear that in mind. News for Tesla. There's loads of news flying out there for Tesla. You're welcome to go check it out. I thought I'd just highlight some stuff that's not super visible. We've still got the institutional ownership for Tesla. That's still really good. All this fear, everyone's saying, sell all your shares, get rid of Tesla. Institutions really aren't following you into that trade. So if you're retail and you're doing that, you're kind of on your own on that front. The options market's a little bit different. That's capitalizing on control of shares, but not actually controlling them. That makes sense. But other than that, we did have the long-range car released in China, so that's exciting. But I really wanted to talk more about the inflation data that's out today. That's going to be quite an important reading for the market. We're expecting it to come fairly in line. I think it was in line with inflation rate month over month, maybe creeping up a smidge. Now, I hate this inflation data. It's a little bit lagging the way it's collected and the way the components of it. I don't think it's a fair weighting. Some of the stuff on there is crazy. But true inflation is still sitting under 2%. And that is typically a more leading indicator. I don't want to say leading. It's a more accurate snapshot of today where things are sitting. Typically, the government data lags this. So it should come down. So I'm not worried about that at all. It's come up a little bit, but we are starting to trend down. If you look at that blue chart, we have that spike and then we're now trending down. Hopefully that continues. It's down a little bit more today. Is that going to be reflected in today's government numbers? Not necessarily, because as I say, that the government numbers are normally a little bit lagging towards the trueflation, which typically leads that data. So trueflation gives us a good heads up where the government data is going, but the government data can go higher at the same time. It's really annoying. Why can a private sector have better data than you? If they're going to have better data, just partner with them. But anyway, we'll look through, see where the inflation's sticky when that comes out. But really, the chances of getting a rate cut in the next meeting are quite high. The jobs market is clearly in way more distress than a lot of the data has been indicating. A lot of the government made up jobs magically vanished. And that's not to say I'm in favour of either party. Both parties manipulate the data, and it takes a while for that to get seasonally correct. There are people that say it's an error in the way the data is collected, blah, 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 blah. I mean, the data revisions were so large. They're just so large. In this day and age, there really should not be an excuse to be producing data that wrong, that incorrect, especially when that data is such an important metric for, our fiscal and monetary policy. We really need to get that data better, get it collected better, need to make it more transparent at the process of collecting that data. And, if it's going to keep being that wrong, then the market needs to dismiss using that data. We need to find another kind of benchmark for it. But again, that's another issue. All the political drama happening there, not really interested in it. I'm only interested in the data, and the data had massive errors in it. That's the concern for me. Don't care who did it, why they did it, what was the cause. It needs to be more accurate. I think having less variance on those numbers is going to be better for the market. I don't know how they're going to fix it. I haven't looked super into it, but that data needs to be better, especially based on the back of the panic that market had with the FOMC meeting probabilities going forward. They absolutely shot up from where they were. It went from having no rate cut to probably having a rate cut. So keep an eye on any jobs data that comes out now, because there will be questions around any revisions on it. So that could be interesting. That's a wrap. If you enjoyed this content, feel free to share it with your mum, your nan, your dad, your dog, whoever. I'll see you next time.